Good morning and welcome to the morning call for Tuesday the 4th of April 2017. Yesterday I promised you I'd like to talk to you about vol, and I'm certainly going to stay with that today before we get onto the RPA. Vol at the moment remains at an incredibly low level despite what's going on around global markets. We've been talking about this probably for 3 months in terms of where it's at. Having a look at the VIX index overnight, it finished just off its low at 12.59. It got down to 12.35 after going up to as high as about 13 and a bit. What I want to really point out though is that is around about one standard deviation away from the historical mean over the last 5 years, and it's a long way away from the volatility leading into the US election. Same here in Australia, it's the same thing. It's very interesting. If you have a look at the VIX index that we have here in this country, it's also trading at around about 14, and that is a really low level indeed. It's even more interesting when you actually start looking at implied volatilities in currencies. And that's a really different thing again. What we've been looking at in terms of implied volatility, have a look at what happened around the indices and the FX market leading into what was going on around the Obamacare repealing. Volatility did not move. We didn't see any major indices or any sort of major FX moves around the whole idea and building up into that idea that if Trump didn't get this through, it would therefore create issues around tax. And that's a real interesting thing that over the last 7 to 8 years, we've really been taught that volatility on any macro level is coming and coming quickly when you have events like what we've had. So what's different? Why have we changed? What's going on inside of it? I'm not sure if we've actually necessarily changed in the markets, but clearly not responding to the same sort of level of noise that we probably had about 2 or 3 years ago when there was still issues around Europe, when we did have this whole question around Chinese hard landing. Because at the moment, if you actually have a look at the retrospective economic data, it's actually quite rosy. But what I do want to point out is that it is actually also at a level of complacency, and that is something that shouldn't really be there. I really now want to harp on about the Aussie dollar and the implied volatility in that. It's currently sitting at 10%, and that therefore means that we're only expecting a 36 pip move either side from the current price you see over my left shoulder all the way through today. That's amazing considering that the RBA is going to report at 2:30 Australian Eastern Daylight Savings Time. It means the market has absolutely no belief there will be actually any form of major change or any form of major movement inside the actual statement itself. That's probably true. However, we have started to see a decline in iron ore, and have a look, it's dropped below 80 US a tonne. Be aware they actually have a public holiday for Qingming over in China, so there won't be an iron ore price in the futures or a spot price tonight. So just have that in there. But therefore, if you have a look at that basically on a straddle idea, it means that if you were to look at buying or buying a put and a call, it needs to move 36 points either side of that, and you should be okay. That's an amazing thing in terms of breaking even. It's also suggesting, therefore, that there is no major macro news coming up or any form of economic data that's really going to push the Aussie dollar in either direction. It's the same if you look at also what's going on in the indices. Most of them are sitting that kind of level. And again, if you look at the straddles there, the most you're having to pay for something even like the Dow is 100 points either side to break even. That's an amazing situation considering the French elections are coming up. There is a lot of Trump news coming up over the next 2 weeks. You do also now have the start of Brexit and what the Europeans might come back to you on April 29th. All of that's very interesting, and why vol at the moment is something we're watching very closely. If you do want to talk more about this, please give us a call, 1-800-601-722. Really happy to talk to you about this because it's something I really enjoy and it's something that I talk about quite a lot. But vol, at this current levels, you've got to be a buyer surely. All that I can talk about and more when you come in and give me a call on the phone. Have a happy trading day. I'll talk to you tomorrow about what's going on for the rest of the week, non-farm payrolls. But again, vol's something to watch.